Hello, everybody. It's Tortoise Investing coming at you today with another 5 stocks from 5 different sectors that you can buy and hold forever. Want to start things off here? Thank you to the 322 people that have subscribed. If you are new and have not done so, please hit that like and that subscribe button. Both those things are super free and easy to do. It helps the videos out and helps the channel grow, and I greatly appreciate it. So, let's go ahead and dive in. If you came for just what the stonks are for today, we're going to be looking at United Healthcare Group. We're going to be looking at Deere and Company, Lowe's, Deere restaurants, which are like Olive Gardens and your Red Lobsters, and Vici. I love you, Vici. And we're going to be taking a look at a deep dive into the numbers, and I've also got the price targets pulled up on TipRanks, so a little bit more information for you. So let's go ahead and jump into it. Got United Healthcare Group here. I like this company under 500. Pretty much just it's one of the best healthcare companies out there in my eyes. It's got a free cash flow yield of 7.58%, a dividend yield of 1.34%, and a payout ratio of 30.19%. Real low payout ratio, going to be able to reinvest a good chunk of money into the company and keep that dividend growing. Excuse me, I always have hiccups when I do this. They have a stair-step growing revenue, their EBITDA, free cash flow, net income, and EPS. Everything is just trucking right along. They do have debt at 54 billion, but their EBITDA is 29 billion. That falls within the 3-time category that I like to have my EBITDA to debt ratio. So they could easily pay that off as not a worry whatsoever. When it comes to their dividend, they've been growing their dividend over the last 5 years at a rate of 17.08%. Love to see it. A great dividend grower and a great compounder too. That's the thing I like about these big dividend growers above 10% is these are compounding beasts. Love it. So they are doing some share buybacks slowly but surely, and they have a return on capital employed that is the most reliable 17 to 18% that I have ever seen out of any company ever. It is very just, you know what you're getting when you buy this company. So let's take a look at some of the price predictions. TipRanks, the analysis people over there have it at a average price target $601.13 as an upside 24% over the next 12 months. Pretty nice little chunk of change, if they call that right. They got 15 ratings, 14 buys. So yeah, I like it. Next up, we got Deere and Company. I know Deere's got a earning coming out in a couple days. If you're wanting to wait for that to see if the company drops even further, completely understand, but as of right now in the year, it is down 14%, which is why I'm bringing it up. It is entering into that sweet spot, that sweet zone. It's got a free cash flow yield of 1.84%, has a dividend yield of 1.34%, and a payout ratio of 16.75%. So low. Love it. They're going to be able to invest quite a bit of money back into the company, and that dividend is in no danger whatsoever. So from 2020, their revenue, EBITDA, net income, EPS, everything is trucking right along. They do have some free cash flow on hand. It looks like it took a little bit of a hit here in 2022. They have 33 billion in debt. Their EBITDA is 12 billion. Again, that falls under that 3-time category. They like to keep things. If your debt is more than 3 times your EBITDA, a little bit of a red flag for me there. It might be an issue, but for them, it is not. Over the last 5 years, been growing that dividend at 15.81%. Another great compounder. It looks like they did pause it from 2014 to 2017, and they did have another brief pause here in 2019 and 2020. So when things are hard, as you can see here, is probably when they pause it. They don't mind to pause and let things level out so the company doesn't suffer too much. So, I mean, it's not a bad thing. They haven't decreased the dividend. They just pause it when they need to. They have been doing share buybacks, which you like to see. And the return on capital employed is growing. It was at around 10%. Now, last year, in 2021, it was 15%, and last year it was right there at 18%. So, growing return on capital employed, growing revenue, growing EBITDA, growing net income, growing EPS, growing company. You like to see it. Now, over on Chip Ranks, they got 9 ratings of a buy out of 14, 5 holds. They got an average price target of $469.46. So an average upside of 29% for Deere and Company. I like Deere and Company. I'm curious to see when their earnings come out if it drops any further and gives us an even better entry point. Next up is Lowe's. Oh, Lowe's. So today is technically Tuesday. This video is going to be coming out on Wednesday. I got to work Wednesday mornings, so I'm going ahead and just pumping this out right now. Home Depot came out with their earnings. It wasn't that hot, so Lowe's and Home Depot are both down, and this dipped below the 200 range, so I felt like letting you know about that might be a good buy-in opportunity, a good entry point. Their earnings is also coming up, so if you wanted to wait and see if it dropped even further, completely understand. So Lowe's has a free cash flow yield of 5.68%. They got a dividend yield 2.07%, payout ratio 38.8%. Again, great payout ratio. This got a great starting dividend. You love to see it. Another good compounder in my eyes. So revenue is growing. EBITDA, for the most part, is growing. Free cash flow is trending upward. Net income, EPS. They have $32 billion in debt. Their EBITDA is $12 billion. Again, 3 times that's 36, so that's more than enough to cover their debt, in my eyes. And their dividend yield over the last 5 years has been growing at a rate of 20.69%. Oh my gosh. They increased it, if I remember correctly, I think this was like a 30% increase, their last dividend hike. And this company's been growing their dividend forever and a day, so they have got their stuff figured out. They've been doing share buybacks pretty aggressively, and the return on capital employed has been above 20%, even in the 40% for the last couple of years. So a great company. They know what they're doing. They got everything figured out. This is very a monopolistic company in my eyes. This is your Pepsi and Coke, your Visa and MasterCard of the home improvement world. Now take a look over here on Tip Ranks at the price prediction over the next 12 months. I got a moderate buy, 18 buy, out of 18 ratings, got 10 buy ratings, 8 holds. Price target of $231.67. It's 18% upside. So if the people that are their professions are to do these analysis are right, 18% over the next 12 months is pretty good. No complaint there. Next up's a new one I haven't went over yet, but I recently bumped into it. Went and got the wife some Olive Garden for Mother's Day, and I was like, you know what? I wonder if they got a stock. They do. Deere Restaurant. They're over Olive Gardens and Red Lobsters. So they got a free cash flow yield of 5.11%. They got a dividend yield of 3.36%. Very nice. And they got a payout ratio of 61.8%. A little on the high side, but below that 65% threshold where it's the danger zone for me. So their revenue, for the most part, has been trending upward. It's kind of like leveled out a little bit. But they've done some new acquisitions here lately, and they're pretty sure they're going to be able to get that EPS back on track. EBITDA, free cash flow, net income, everything looks good here. EPS is growing. They had the 2020 hiccup, like pretty much everything in the world almost did. EPS is growing again, as you can see. They do have some debt, but not very much. They have $901 million in debt. Their EBITDA is $1.5 billion. So a very low debt company, which is another reason why I really, really like this. I like how they have things sorted out here. They never really carry too much debt on hand. So take a look at the dividend. It was growing. In 2020, they had to take things back because, well, there was a lot of companies that had to cut things back in 2020 because of the pandemic, and a lot of restaurants were hit super duper hard around that time. But that was a black swan event, and since then, everything seems to be back on track. Their average over the last 5 years is 13.94%. So another really good compounder. And if you look here, after the 2020 hiccup, they just returned it back to where it was before they cut it, and they're back to increasing it. So I like it. I'm glad that they didn't just stick around this zone and just increase it from here. They put it back to where it was. So very nice. They're not doing too many share buybacks. The return on capital employed looks like it is growing. It is currently 14% from last year. But yeah, you want a different restaurant company? Texas Roadhouse is the other really good one, but I feel like it's been on a run here lately. Look at Deere and Restaurants. Don't think you could go too bad with them. Olive Garden, Longhorn Steakhouse, Cheddar's. Yeah, I like it. So take a look here at Tip Ranks. They got 21 ratings, 16 buy ratings, 5 holds at an average price target of $164.11 over the next 12 months. That is an upside of 8.86%. So nice little upside. They got a good dividend. So another really good compounder in my eyes. Next up, Vici. I can already just tell you, I'm going to be adding to this position as soon as I get paid. If this stays below my price target of 32, I don't care if this makes up 20% of my portfolio. I love this company. I love the future of it. And especially under $32, just ridiculous. Their free cash flow yield 6.9%. Dividend yield of 4.89%. You don't really pay too much attention to the payout ratio because it is a REIT. You look at funds from operations, and I can go ahead and tell you their funds from operations are perfectly fine. So revenue, EBITDA, free cash flow, net income, everything is just growing with Vici. I love this company. Over the last 2 years, they've been growing their dividend on an average of 8.7%. So a good consistent grower of around 8%, and you've got a dividend yield that's right there at 5%. That is absolutely delicious. Love it. Great compounder. Another great compounder. I love compounders. I love dividend compounders. So out of 13 ratings, got 12 buys, 1 hold at an average price target over the next 12 months of $37.12. That is an upside of 18.46%. Give it to me. Love me some Vici. I've been looking at some Deere. A lot of good companies out there. I know the markets are crazy right now because the whole debt ceiling crisis, and things are up and things are down and things are all the way around. But, there are still buying opportunities out there for you. Just got to know where to look. I hope that you enjoyed today's video. As always, if you are new, please hit that like and subscribe button. And none of this is financial advice. These are just educational purposes and just to let you know that, there might be some things out there you want to look into. But yeah, greatly appreciate everyone's support. And until next time, see yous.